In a very highly anticipated FOMC meeting this week, the Fed decided not to raise rates in September, as concerns over China, late summer volatility and stubbornly low inflation influenced the Fed's decision to keep policy unchanged. Now, it's a waiting game again, and every upcoming meeting is on the table, so as long as data and conditions can justify a move.
Well, actually, right now, nobody really knows. It has not been a surprise that the Fed refrained from hiking its rates this week because the global conditions were not sustainable for a rate hike from the U.S. We have seen some huge market volatilities. We have seen some China sell-off, some commodity markets slippage. So all these conditions were not satisfactory for the Fed to take the first step, simply because the US is not alone and we are living in a very much integrated global economy. So from now on, we have to see that the fact that the world economy is not doing so great and the recovery is still very much on a shaky ground, if we can even talk about recovery, just brings the question on the table of whether the US Fed can proceed with a rate hike before the end of 2015 or not. So now the probabilities have been lowered. For in October, we can see that the US sovereign markets give no more than 20% probability of a rate hike, whereas when we look at December, it's less than 50% after the Fed meeting.
Greeks head to the polls again on Sunday for the third vote in 2015. Ipek discusses what to expect on Sunday and potential movement in the euro.
Well, I believe for Greece itself, it's very important because Greece is having a nightmare this year, especially regarding its politics. For the European Union, it's a little bit more different because the European Union and the Eurozone is no more concerned about what's going on in Greece per se, because we are not talking about the euro anymore. We are not talking about the EURUSD anymore, Grexit anymore. We are just talking about some political issues, which is mostly which is mostly the internal affairs of Greece. This is why I don't think that the situation in Greece is going to have a significant impact on the European market. So we do not expect to see any gap opening or sharp moves or large swings related to Greek situation as it has been during the summer.
Looking at other events scheduled for the week beginning the 21st of September, we have flash manufacturing PMI data out of China Wednesday morning. Now, activity in China's manufacturing sector slowed markedly in August to 47.3. However, the market is looking for a slight pickup from Wednesday's reading. US durable goods orders for August will be released on Thursday. Durable goods orders surprised on the upside last month, rising 2% in July and later being revised up to 2.2%. However, market expectations are for a contraction in August.
Well, the US durable orders are expected to have contracted by 2.2% in August. So this is not really good news, and it goes in line with the fact that the world economy is slowing down. The China has seen some difficulties, some big difficulties actually, not only some difficulties, and it all gets together that the recovery is not on a solid ground. So we can see that even the US GDP number that is going to be due next week is going to be revised slightly lower from 3.7% to 3.5% because of the fact that the US recovery is not as strong as we think, and the US durable numbers or the contraction in US durable orders might just give another confirmation of the fact that the US economy is not doing as good as some thought at the beginning of the year.
On Friday, we have the release of the latest Japanese inflation figures. Now, headline inflation in Japan slid to a year-on-year rate of just 0.2% in July, and the market is watchful for a further slip in August. The Bank of Japan stood firm on easing at this week's meeting, but following disappointing trade figures for August, some analysts are still undecided on whether further easing is needed by the BOJ.
Well, we have seen yen strengthening this week, especially on the back of US dollar weakness, but also the fact that the Japanese economy is still not generating some inflation is a major concern. So we are going to be very much focused on the inflation numbers from Japan. What we will be looking at is going to be the CPI ex fresh food, and we expect some contraction in consumer prices excluding food in Japan. It's going to be 0.1% on year most probably. So this is the consensus. So Japan still has problems to step out of the deflation phase. And now that the world is stepping into deflation, it's going to be even harder for Japan to deal with this falling prices. So this is why we might expect some additional stimulus from the BOJ before the end of the year in order to inject some more liquidity and hope to see a rebound in the inflationary dynamics before it gets too much negative, before it gets too much deep in deflation.
Before we wrap up the week ahead, Ipek shares her view on the most interesting FX pair of next week.
Well, we have seen cable going through 155.70 levels this week, and this is quite interesting because as we don't see the Fed moving forward, now the convergence between the BOE and the Fed becomes more evident. So in the UK, we have seen the inflation numbers flat, but the earnings and the wages has made good progress, and we expect the progress to continue, especially with the new conservative government's plans on living wages. So this is a preliminary indication or indicator for higher inflation. In this case, we might expect the BOE to become a little bit more hawkish, and hawkishness from the BOE and dovishness from the Fed is just going to put some upside pressures to cable, and now we are just about 156 mark, and we might expect to see an advance to 158 to 20 levels.
That's all for today's Week Ahead. Thanks for tuning in. Have a great weekend. Goodbye for now.